day before, and people said, you know, you're crazy if you don't get in on this. So it's very human. Now, with housing, it's something even more dramatic than that, because most people aspire to own their own home. And if you really think that housing prices are going to go up next year and the year after, you feel, if I don't buy it this year, I'm going to have to buy it next year. That's not true of an internet stock, but it's true of a home. And then when somebody makes it very easy for you to do it by saying you don't really have to put up any money, or you can lie about your income a little, or, you know, we'll give you a 100% mortgage, you're going to do it, because everybody that's done it has been proven right. You have what they call social proof, and, you know, you're going to feel like an idiot if you didn't do it. Next year the house costs more.
It's found money.
It's found money, sure.
And so when you look at where we are going, there seems to be two issues that are apparent to me, at least: risk and leverage. We just lost sight of risk and leverage.
Yeah,
what was appropriate.
People will do, you know, again, because it pays off for a while. I mean, you can use leverage, and it's the only way a smart guy can go broke. I mean, it basically is if you owe money, you can't pay tomorrow. If you just pay for everything and you do smart things, eventually you get very rich. You can do smart things and use leverage, and if you do one wrong thing along the way, it can wipe you out, because anything times zero is zero. And but it's so reinforcing when the people around you are doing it successfully, you're doing it successfully, and it's a lot like Cinderella at the ball. I mean, you know, at midnight everything's going to turn to pumpkins and mice, right? But as the evening goes along, I mean, you know, the guys look better all the time. The music sounds better. It's more and more fun. You think, why the hell should I leave at 11:45? You know, I'll leave at 2 minutes to 12. But the trouble is, there are no clocks on the wall. And everybody thinks they're going to leave at 2 minutes to 12.
And you're having a good time.
Yeah, sure.
Yeah. So if this plan, you hope it will do what? It will loosen credit. It will stop the slide and the panic. People will have more confidence.
Confidence is key. Confidence is key. You're not going to put your money. You're not going to leave your money with me unless you're confident I'm going to give it back to you. And at this point, when Treasury bills, that 7-day Treasury bills at 1/20th of 1%, it's not because people want to earn 1/20th of 1%. It's because they trust the fact that Treasury will give it back to them next week. Right. And I'm sitting with $6.5 billion we're going to use to close the Mars Wrigley deal on October 6th. Right. I've got to hand over that $6.5 billion on October 6th. Now, I have to be very careful about where I leave it in between now and then, because they're expecting me to show up. When I lose confidence in other people, all kinds of institutions, and there are plenty of them that I've lost confidence in, you know, then their funds aren't available. They don't have it for the next guy. I mean, the whole economy just comes to a grinding halt. And confidence in markets and in institutions, it's a lot like oxygen. You know, when you have it, you don't even think about it. I mean, it's indispensable. You can go years without thinking about it. When it's gone for 5 minutes, it's the only thing you think about. I mean, and that's exactly, the oxygen has been sucked out, you know, of the credit markets and confidence. And there has to be, it's got to be given a jump start, basically. And
that's what this plan is about.
That's what I hope it gets done.
And if it doesn't work?
You turn the spigot, but you don't get it. I have argued with the senators and congressmen I've talked to, you know, you don't want to be too little, too late. Now they're being, you know, they're being somewhat too late in my view. But I'm glad they're, you know, but that's okay. I mean, you know, we're going to argue for a few weeks after Pearl Harbor to decide whether it was really the Japanese that attacked, or you know, whether we should actually commit a few battleships. But the too little part, you know, it could be a mistake. I mean, this has to be done on a big scale.
Too little meaning in terms of dramatic steps, or the amount of money you're spending, or
it's whether people think it's too little when you get all through with it. I mean, in the end, $700 billion is a lot of money, and it will buy a lot of distressed property. And if you buy them at the right price, you may be buying $2 trillion market value. I mean, $2 trillion of face value for something. Yeah. The one thing you don't want to do, it doesn't make any difference what the guy paid for it that you're buying it from, or what its carrying value is. You've got to buy it at market. And one way to do that is if some institution wants to sell you $1 billion worth of mortgages, you know, they might have to sell $100 million in the market, and then you'll buy the other $900 million on the same terms. Now, the very fact that this has been authorized, or will be authorized, I hope, will firm up the market to some degree, and that's fine. But you don't want to have artificial prices being paid.